Hello everybody, welcome to the Fundamental Analysis webinar this evening with AvaTrade. My name is Troy, I'm a Senior Account Manager. I'll be leading the session. Before we get going, let's do a quick systems check and just make sure that the audio is working fine and that you're seeing my screen all right. If you would, just type OK in the chat box if all is good. Okay, great. I've got enough responses. Looks like we're up and running fine. If anyone runs into any issues as we go along, feel free to let me know. A lot happening fundamentally with really some positive momentum coming from a couple main driving fundamental news factors. So we'll take a look at what's moving the markets today and how you might be able to try and take advantage of things. As always, keep in mind, no one trade is guaranteed to profit. There's risk with each and every trade that you take. That's why it makes sense to manage your risk in a way that's appropriate for your risk tolerance, for your balance size, etc. Using trade sizes that make sense and different measures such as stop loss marks, hedge trades, and even the AvaProtect feature that's found on AvaTrade Go, which is our mobile app made by AvaTrade. If you haven't downloaded the AvaTrade Go mobile app, I would say that it's maybe a good idea to check it out. Some very useful risk management features on it that we'll take a look at here in a bit. Also, the AvaTrade Web Trader platform has those same features and functionality to it to really make your risk management easier to understand what you're doing, what you're getting into with each and every trade. Now, with the risk understood, we also can talk about the fact that each and every trade has good potential for profit as well, which is why we're all here, I would say, is to go after those nice potential profits with each move. And the idea with what we cover in today's session and in the webinars in general is to come from an educational perspective, not to be taken as financial advisement, but from an educational perspective, what are some ways and ideas for improving upon your trading strategies and improving maybe ways you go about managing your risk so that hopefully at the end of the day, you've got a better P&L on average as you go forward. So what is fundamental analysis? In general, it's the news of the day. It's the things that are breaking in the headlines. It's the announcements that have come in on the economic schedule. Two main types of fundamental news are regular economic events, like the economic schedule, earnings reports. We're getting into earnings season again coming up for the quarter. So there's some excitement about those numbers that will be released for a number of companies. So these types of regular economic events that we know what they'll be, when they'll be, are one type of fundamental news. And the other type would be the extraordinary economic events, like things that you can't predict exactly when they'll be or what the topic will be, whether it's the breaking news about the pandemic, about new viral outbreaks, or about vaccines, updates about vaccines that could be coming, new therapeutics, just headlines that you don't know what they'll be or when they'll be for sure. And they could be positive and swing the markets up, or they could be negative and swing the markets down in a moment's notice. And so those types of extraordinary economic events, those things you can plan for without really knowing what they'll be or when they'll be, but knowing that something eventually will break in the headlines and move the markets. And whether it was Brexit in the past or the trade negotiations between US and China before this whole pandemic outbreak, or all the headlines during the pandemic outbreak, there certainly have been a large number of extraordinary economic events occurring that have moved the markets. And so a lot of times you can handle those with pending orders, waiting for breakthrough moves. The news article that comes that whatever it is could cause a large breakthrough either up or down. So these are the types of things we'll keep an eye on as we're looking through today's news and thinking about what are some opportunistic entry points and exit points based on the fundamental news as it is right now. As we go along, please feel free to ask questions, give input, give your ideas. I'm happy to share them. And so let's take a look then at a tool that I mentioned, the AvaTrade Go mobile app. So, and also the web trader, you can log into the web trader from here, from our main website. You log in, and if you go directly to the client area when you log in, then that means you need to talk to your account manager, get the web trader activated on your platform. It's a web trading platform built specifically by AvaTrade for AvaTrade traders. And it has functions on it that you also will see on the AvaTrade Go mobile app. So whether we're talking about the AvaTrade Go mobile app or the web trader platform, you can get these platforms on your mobile device or on your account, and the tools are really nice for risk management. We've got a special feature called AvaProtect. You can cover against any and all losses during that time period, the covered time period. Any losses are added back, and your only cost is the premium cost. And so for a relatively small premium cost, you can have unlimited risk coverage during the covered time period. And that's a great way to manage risk, especially if there's high volatility. It can work out very well, where your profits are all yours if things go the right way, and the risk is covered during those time periods if it goes the wrong way. With the mobile app and also the web trader platform, that's available, as well as if you set a take profit or a stop loss mark on the web trader platform or on the AvaTrade Go mobile app, it calculates your exposure and your potential profit for you and converts it to your account currency. So the order window, before you ever open that trade to buy or sell, tells you what your risk is, what your potential profit is, converted to your account currency. So it's very nice that the order window acts as a trade calculator, basically, and also has this extra feature of AvaProtect on gold, silver, FX pairings to help you manage your risk. So it's a very nice tool and platform in general to utilize. And I think you'll like many of the other functionality and features of those platforms as well. Now, as we look at what's happening in today's market, in the fundamental news specifically, tech stocks have gone through the roof today. And the question maybe is why? Why are tech stocks so excited today? Why is that what's driving up the NASDAQ, the Dow Jones, the S&P 500, and the rest of the world is kind of following along as well with the momentum for the same reasons and for some other reasons that we'll go over. But tech stocks have rallied quite a bit. One of the reasons is hopes for new stimulus in the U.S. Okay, so the negotiations are on again. Trump has signaled after saying they were off the table. They're back on the table, apparently, and they're talking about multiple trillions of dollars of potential stimulus coming again in the U.S. to help small businesses and other areas of the economy. And Wall Street's very excited about that. Specifically, the tech stocks are excited about that today. Gerard, I'm glad you fixed your problem there with your audio. So that's one thing going on, potential stimulus and optimism over that, although they're still bickering, the right and the left in the U.S., the Republicans and the Democrats, because a lot of it is political brinksmanship too, leading up to the presidential election. What else do we have going on? FANG. If you don't understand that term, they're the tech stocks. It's another way of talking about specific tech stocks. Basically, this is Facebook, Amazon, Apple, Netflix, and Google. That's the first letter of those 5 stocks. Okay, Facebook, Amazon, Apple, Netflix, and Google. FANG. That's what it's referred to as, those stocks. And they are really jumping through the roof. That's the same thing I just mentioned, right? Tech stocks. Excited. So they're not only excited about stimulus, potentially, but specifically they're excited about the fact that there was a deadlock on a tax decision. And specifically, it's about the fact that these tech companies, because they're operating virtually, And it's hard to decide, okay, where are they actually located, these companies? They're kind of virtual companies in many respects, and their customers are all around the world, but yet they claim a base for when they claim their profits and their revenue of maybe a region that has lower taxes than other regions. And so they're not necessarily paying the tax rate of the location that many of their customers live. And so it's kind of a loophole. And there's been some talk internationally about how to fix that so that they pay the tax rates that maybe some feel they should in different regions around the world that might be higher than the tax rates they're paying. And so because there was no decision against them on that, there was a deadlock on that decision, that created a lot of excitement, specifically with the tech stocks today. And so while stimulus is playing a role, specifically, why did the tech stocks get so excited? I think it's beyond the stimulus and it's into this topic, okay? Specifically, this group of companies, and I would throw Microsoft in there too with these 5 stocks. So those 6 stocks are lifting the markets. And it has to do a lot with this tax decision that was looming and wasn't looking necessarily good for them. And at least they had a bit of good news on that front from their regard. Now, European shares hit a 5-week high, again on stimulus hopes in the European regions as well. Okay, optimism about a rebound, and largely because of stimulus hopes. So European shares also rising. Bank of England said absolutely open to negative interest rates. Okay, what does that mean? That means instead of paying interest when you borrow money, the bank might pay you to borrow money, right, as a business. And so that helped create momentum on the markets as well, because who doesn't like cheap money to expand businesses and hire people and get the economy going? So negative interest rates, well, maybe in the long term is not a great idea or a great sign of economic health. In the short term, anyways, the markets are excited about maybe interest rates going negative. Okay, so a lot of positive news stories, US, European markets, Bank of England now, across the globe. I found this article specifically on copper. Why does copper go up when someplace like China is doing well and coming out of a pandemic and their markets are opening up? Industrial production is ramping back up. Copper in general is used in industry, right? It's used in wiring and all kinds of things that when economies are booming, copper demand goes up. And then there's also a story about some of the output, specifically the miners in Chile, maybe going on strike, production being down for mining copper. So lower supply maybe, and higher demand for copper, specifically the #1 buyer is China, equals maybe bullishness on copper. So everything seems positive sentiment today, right? That's kind of the way everything's looking in the headlines. And you see the futures were green all day and the markets opened green. The dollar index is kind of flat, up 0.03, basically not moving. And it makes sense. The dollar pretty much has been weakening when there's good economic momentum because people are selling the USD and buying into riskier assets like stocks. And the volatility is kind of flat, up less than 1%. So just kind of flat, not a lot of fear on the market. So that's very interesting to see. A lot of positive sentiment. So that's, in a nutshell, that's the fundamental picture right now. So let's take a look. I'll pull up my demo account. We'll take a look at what's happening on the live charts, and maybe you're interested in making some moves. So here's the S&P 500. Those are 4-hour candles. If we go to 1-day candles, we see the all-time high for the S&P 500 up here. It looks like there's not much resistance between where the price is now and the all-time high. So from 35.27-ish, where we are now, to 35.90 almost, 89, not much resistance. So looks like the potential for a climb up towards the all-time high right now with the momentum that's occurring. And if the US passes stimulus, boy, it really could go rushing up there and challenge the all-time high. Okay, so that's something to keep in mind. The bigger picture on the one-day candles, there's room for as much as these assets have gone up, there's room for more. Okay, potential climb before you get to the resistance level. Now, if we zoom in, say 15-minute candles, it's a strong uptrend since the market opened. Okay, climbing, and it accelerated when the US market opened today. The futures were climbing all day and then accelerated when the US market opened. You might say, okay, well, that's all well and good, but if you haven't traded on it already, what do? Do you get in the middle of this big climb? Do you wait? And that's up to each individual trader, but I think some pending orders could make sense. So if you see this as a support level, you see this was resistance, little pullback, and then a breakthrough. If this pulls back down to this little support level, that could be a spot for what type of pending order that would buy from a lower point. If we're looking at the momentum being positive, if there's a pullback here, that could be opportunistic to buy from a support level with what kind of pending order would buy from a lower point if you were trying to set up an entry point down here to trigger automatically. Would be a buy limit, correct? Buy limit. So you could hope for a pullback to get in at a better spot and go for continued momentum up. Now this could just keep climbing, right? There's enough momentum here that it could keep climbing. That's up to you. You could get in on a market move and put your stop loss below the first support level. And if you did that, we see it spiking up now, right? And so you see the power of the fundamental news cueing you in as to the direction you might prefer, rather than just jumping in with a sell because it went up and you think it has to go down. Okay, so you could have a pending buy limit down here, and you also could prepare if it breaks through this high that there's continued momentum. So a buy stop if it breaks the high point of today, a buy stop up here to trigger a buy if it breaks this little resistance. Okay, that would have worked here, right? It formed resistance and dropped back. It broke that high of the day and up it went. So a buy stop here would have worked out well. So here's that repeated. Resistance and drop down. If it breaks the high point, you're in on a buy stop up here to buy with the demonstrated momentum as it breaks through the day's high, potentially. So a buy stop up here, pending order, and a buy limit pending order in case it pulls back down. Those two things make sense with the fundamental news today. Okay. How do you do the pending orders? Very simple. I have a couple asking about how to do that. You switch from market execution to pending. A buy limit. Buys from a lower point. So if you were saying I want to buy from 35.23, if it drops back down, banking on a bounce back up. Stop loss maybe just below that support at 35.15. Just as an example. And take profit back at maybe today's high, 35.32. Okay, so there's an example of a buy limit pending order. Waiting for a pullback. If it hits the first support, you buy, hoping for a bounce back up, and your stop loss is about half the risk of your potential profit here to get below the next two support levels. 1, 2 support levels. It would really have to reverse for you to give up on that. Now, the other option is if it never comes back down, if it breaks to a new high, that establishes momentum. So you could also have a buy stop pending order. Okay, so pending order, buy stop, waiting for a breakthrough before you get in at 54 or 35 maybe. 35, let's say 36 even, to make sure it broke the resistance. Stop loss would be back down below at 35.30 or 35.29. Okay, and take profit at some undetermined spot above, right? So we'll take a look, where would your take profit be on a buy stop? So if it breaks through and triggers a buy stop, you got your stop loss back down below that broken resistance in case it reverses, small risk. Where would your take profit be on the buy stop? We have to see, well, where is, let me get rid of this little vertical line. Where is the next resistance level? We drew it up here, right? It's up here, around 35.89, let's say. So your take profit on the buy stop could be 35.88 or so, just before that resistance level up here, okay, before that all-time high. So if it breaks through, you're in for a ride up, potentially for a potential profit way larger than what you're risking. That's where that next resistance level is on the breakthrough up. And you could consider that, okay, then maybe since that's such a large climb to the next resistance level, maybe I would be more patient with my stop loss on that one, on the buy stop, and put it below a couple support levels before I would give up. So then in that case, the buy stop, instead of being at 35.29 with your stop loss, maybe you'd say I'll go below this little support level here too. So if the buy stop triggers, you have a large potential climb for a take profit, and your stop loss would only get hit if it broke back below this resistance and broke back below this support level here, and then hit your stop loss. So you'd have a support level if this resistance breaks and it goes up, one, and then a second support level would have to get broken before you gave up on the buy stop move. Okay, so many times that's called widening the strike zone. Many times you'll find better success with stop losses that aren't too close. You can wait and be more patient if you have your stop loss below not just one support level, but two. Okay, so we're prepared for getting in on a buy from a better price if it pulls back down. We're also prepared to buy if this breaks this high of the day, to buy from this price up here, as that would be an establishment of an uptrend again, just like happened here when it broke this high and it climbed. So really setting up nice for some technical breakthroughs potentially here. Now, what if we look at the individual, and we could look at NASDAQ, we can look at other indices, they all look very similar. We see it climbing up, Dow Jones climbing to a high of the day now, DAX climbing to a high of the day, the CAC climbing to a high of the day and trying to push towards this high over here. We see the FTSE, same thing occurring. Bullishness all across the markets. We can look at the Nikkei as well, and the same thing's happening. Uptrend, uptrend, uptrend. So the fundamentals say positive momentum. You're just looking for the right technical entry points to try and ride that wave. Yeah, Amir, we could take a look at oil here in a little bit. Now, we mentioned the FANG group of shares, of stocks. So that's Facebook, Amazon, Apple, Netflix, Google. What happened with these stocks? Look at the gap at the opening when the US market opened. Those of you who like to trade the stocks that open and close each day because they're not on the futures, you really get a good idea of momentum from what direction the market gaps when it opens. Okay, many times you get a gap. You see back here, this gap from last week, it gapped up, and what happened? It kept climbing. Here it gapped up, and it was a larger gap. What happened? It climbed with larger momentum. The direction of the gap many times is an indication of the direction of the momentum of the day. If you had looked at the fundamental news and said, oh, wow, that's really good tax news for the tech stocks, and then you also saw that there's stimulus hopes now that are renewed in the US and in Europe as well, and you say, wow, there's a lot of positive momentum here. As soon as you saw this upward gap and you knew those positive momentum stories were there, you could have said, okay, I'm buying. As long as it doesn't re-enter the gap, I'll buy and go after a take profit of whatever distance I'm looking for. And so your stop loss then would have been down into the gap. If it re-enters the gap, those of you who have ever traded the trade the gap strategies, if a movement re-enters the gap, it tends to many times refill the entire gap or almost all of the gap before going up further. So it never did re-enter the gap. So as soon as it continued the uptrend right here, okay, there's the high point it hit and pulled back. That was resistance. Once it broke through that resistance, it established an uptrend in the direction of the gap. And so that's where your buy stop would have been. And you'd have been in on one. Here it established resistance again, pulled back. Could have had another buy stop up here. It broke that and climbed. That's two successful breakthroughs you could have traded on in the direction of the gap, in the direction of the fundamental news that we looked at. And now here's the third breakthrough trying to happen. And this is on 5-minute candles because it's easy to get multiple entry points on these short candles. This is a way of scalping the market in the direction of the momentum, riding the wave until it dies, right? Riding the wave until it dies. So we've got our buy stop on the S&P 500. It just as easily could be on Google, right? On the specific stock. What's driving the NASDAQ, the S&P 500, the Dow Jones up are these tech stocks right now. And so you could trade on the individual tech stocks like Google with the same strategy we just simulated on the S&P 500, okay? It's looking like it could break through just like the S&P 500's trying to break through the high of the day, and that could be a reason to buy, okay? Yeah, Patrick, usually good economic news, whatever country that economic news is in, tends to strengthen their currency. But of late, the USD's been weakening with good US economic news because so many people bought into it as a safe haven. They're kind of dumping it and buying back into the stocks and riskier assets. So right now, the more recent trend has been good economic news. The USD's been weakening. And because the stocks are paired against the USD, that's the currency you're looking at when you're seeing 1,571 per share. That's $1,571 per share. So if the US dollar weakens, that makes the stock rise even easier. So right now USD is relatively weak and the US assets are climbing easier because of it. So here's the breakthrough. Just broke the resistance. Okay, boom. So the S&P 500 trade on our buy stop already triggered. Okay, see it's in the money right now. So our S&P 500 breakthrough triggered. Now our take profit is way up at that 1-day all-time high that we saw on the S&P 500, and our stop loss is below 2 support levels. So if it pulls back a bit, we'd still be in it. If it pulls back enough to break 2 support levels, okay, we've managed our risk, we'll get out. Right now we're riding the momentum and up in profit on that buy stop. And many times people say, why would I buy from a higher point? It's counterintuitive. Don't you always want to buy low and sell high? Well, the idea of buying from a higher point is buying after you see the established momentum, okay? Confirmatory type movements. Now let's go ahead and look at Apple. Doesn't it look the same as Google there? Look at the gap. Look at the direction of the gap was up. And then what happened? It continued in the direction of the gap. So all you had to do was pay attention before the US market opened to the fundamental news. The headlines were there all day about renewed stimulus hopes, about this tax decision going the way of the tech stocks. And so as soon as you saw the big gap, that establishes confirmation of upward momentum. You could have started looking for entry points to buy. With your stop loss down here, if it re-enters the gap, that's a signal that maybe there's a pullback to retrace that gap, but that never happened. So it never would have hit your stop loss down here in the gap. So once it went up, boom. Even if you were waiting for breakthroughs, it broke this high point, that you get in on a buy stop there. If it broke this high point, established resistance here, boom, you got in another profit. If it broke this high point, which it just did, now you'd be in the money again on your third try. Now, eventually it won't work, right? Eventually it'll pull back. Nothing keeps climbing up and up and up forever. Eventually there'll be a pullback, and that's the idea. Even if it pulls back and you lose on your breakthrough move, then you could wait until it pulls back. Remember, I prepared a buy limit. Also on the S&P 500, you could do the same on these individual stocks, because eventually the breakthrough moves, you might get in with bad timing and you got in on one that's going to pull back and hit your stop loss. Okay, fine, limited risk. But if the fundamental news is still on your side, then you can re-enter at that better price if it pulls back, as long as you still believe in the fundamental news. Okay, as long as it still exists. And that's the idea of preparing not just the buy stop that broke through and triggered, but also in case that goes bad and it pulls back, I'll get in at a better price with my buy limit, because the fundamental news says that's maybe a good idea right now. Not just on the indices, but on these individual stocks. Look at Apple breaking through. We've got the other tech stocks that are in that. We looked at Google, and we can look at Facebook. I think I have it up here. Here's my Netflix. That's part of the FANG group, also climbing, trying to break the day's high. We see the upward gap. Netflix actually pulled back down, refilled the gap. You see, and remember I said if an asset re-enters the gap, many times it refills the entire gap. Look what happened. It gapped up here. Once it re-entered this gap from the opening, it refilled the entire gap, then went the direction of the original gap. That happens many, many times. That's a classic example of refilling the gap and then going in the direction of the initial momentum. I'm glad one of these actually did that. And so remember I said you put your stop loss in the gap. This one you would have gotten out of when it re-entered the gap, and then your re-entry point would be at the bottom of the gap, down here. At the bottom of the gap, you'd have bought again, and look at the profit. So remember I said some of them will pull back, might not have been the perfect entry point. You can re-enter and still go in the direction of the momentum. Here's that example. This one went bad. If you got in, it did not keep climbing. It pulled back, re-entered the gap, would have hit your stop loss, and then you'd have been able to re-enter with a buy limit at the bottom of the gap, which acts as support. The bottom of the gap acts as a support level. Okay, any questions at this point? And we see that S&P 500 surging back up into profit. Any questions at this point before I move to another asset? And yes, we could look at Facebook as well as part of that FANG group. So here's Netflix. Let's find Facebook. Someone was asking about it, so we'll find it. There's Google we looked at. Apple we looked at. Here's Facebook. And you see it did the same thing. It gapped up. It pulled back. It actually re-entered the gap a little and then went back above it, and up it went. Okay, so again, there's your resistance that it formed. Once it broke through, there's your climb with your buy stop up here above this first resistance level before it pulled back. Had you entered as soon as it opened, you'd have hit one stop loss because it did re-enter the gap. And then once it broke back above the gap, that's your spot to establish the uptrend again. Okay, so really high potential moves here on these tech stocks. And Facebook is another example of it today. In the direction of the gap, huge, huge potential profits. Okay, and those of you that are scalpers, you can be in and out with this momentum very quickly. You can say, okay, I'm up $10 or whatever it is, and boom, I just pocketed a profit. How do you do that? Because you're riding the momentum that has been created by the fundamental news that you identified. They keep pushing towards the direction of the fundamental momentum, right? Until the fundamentals change or until you get a temporary pullback, right? And if you get a temporary pullback, that's where your re-entry is important, to re-enter with that buy limit in this case. Now, I know we keep talking about buy. That's because that's the fundamental direction. That's what the fundamentals are telling us right now. It doesn't mean you can't prepare for a sell. Okay. So yes, this can work in swing trading as well, riding the momentum, the fundamental news. Now, what happens if the news changes, right? Couldn't an article come out right now that Trump calls off stimulus talks again? What do you think would happen with the market right now if a headline just broke that said Trump calls off stimulus talks? It could happen with a tweet anytime, right? It could tweet that out. The way he changes his mind sometimes. So, what do you think would happen with all this momentum if that tweet came out right now? Would probably reverse, right? If that came out. So, what kind of pending orders could you prepare below a significant support level that if it breaks below it again, you could have sell positions prepared as a sell stop pending order? Because yeah, sure, the momentum keeps climbing right now. That's great. But remember I said there's the type of fundamental news that can break at any time that you don't know what it'll be. So we can identify, we can go here and say, okay, here's the 5-minute candles. Here's a support level here. Okay, it came and pulled down and bounced. Here's another support level here where it broke through, came down and bounced. So if this came down and broke one support level, broke two support levels, at some point you could have a sell stop down here ready to sell if it broke enough support that you say, wow, there must have been a really big reversal on the market. And you could get in the opposite direction with a pending sell stop. Okay, so in this case, you're not trying to be right. You're not saying, oh, I'm buying, I'm only buying because I think the market has to rise, and so that's all I'll do. Great, buy if that's how you feel right now, because that's what the momentum is. But prepare for the unknown as well, with those pending sell stops in this case below significant support levels, that if it breaks those support levels, then hey, something major must have happened. Okay, so that's a way to prepare for the unknown while you're currently trading with the known. Market moves and breakthrough pending orders in the direction that you see the momentum currently, but preparing in the opposite direction with pending orders in case the market swings. Okay, it can work very, very well. Now, I had someone ask about oil, so let's take a look. Oil took a plunge, dropped down. Okay, now we take a look and we say, well, I see a little bit of support on the 5-minute candles there. Whoops. I don't want a vertical line. I want a horizontal line. There we are. Okay, a little bit of support formed on the 5-minute candles. Now, some reasons why would oil be pulling down when there's so much economic optimism right now? Part of the reason is oil went up artificially because of the big hurricane that went through the Gulf of Mexico, temporarily cutting into the supply coming out of the oil rigs in the U.S. region. So maybe it's just a bit of a correction on oil coming back down after that temporary rise with that situation. So if we look at 1-hour candles, that's a nice support level, right? We looked at on the 5-minute candles, we saw this support level and we drew it on the 5-minute candles. Now we go to 1-hour candles and we look back to last week, and this is a more major support level right here. We see this is an important price level, support, 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 and again responding at that same area of support. So we see this area was resistance back here around the same price level. So between that line and this line here, that's an important price level. If it breaks below these two lines, that's a downtrend then. You might have sell stop positions ready at this price level down here. Okay, this is kind of a neutral zone here in the support and resistance levels. And so right now, what's the move on crude oil? Technically speaking and fundamentally, it seems like buy, right? Why might I put a buy position on crude oil? Technically speaking, it's on a nice support level, right? So that's one reason you might buy on crude oil. Secondly, there's optimism in the market right now. What happens to oil prices typically when there's economic optimism that the economies might start doing well? That tends to drive oil prices up, okay? Because the assumption is if economies are doing well, then maybe there will be an increase in oil demand, okay? Amir, you're asking about the COVID lockdown effect on oil. As economies are coming out of lockdown, that tends to increase demand for oil. more people are driving cars, burning up gasoline. If the airlines start to open up because there's a vaccine or better therapeutics out there, they think there's a better handle on the virus. All of that type of economic lift helps to bring oil prices up. And so I think we are nearing a vaccine being ready here in the coming weeks or month. There's optimism about that. There's optimism about stimulus packages. We just looked at the headlines. There's optimism in the tech stocks about maybe a negative tax development not quite occurring yet for them. So there are some reasons why you might trust this support level, fundamentally speaking. Technically speaking, that's a great support level to buy off of if you're a pure technical trader. Then you throw in the economic optimism today and you say, well, that looks like a pretty decent support level then. So if you buy off this, where might your stop loss be? Below this little neutral zone where you have a level of support and a little bit of a level of resistance that you see here from back a week or so ago. Okay, that was resistance. Once it broke through, the support formed up here. So where would my stop loss be on this market buy? It would be down below this neutral zone of support and resistance. So right down here, 38.7. If it hits 38.7, then it broke that support. Then there's something negative going on for oil that we weren't anticipating. So we then say, okay, stop loss then 38.7 makes sense from the technical setup there. Okay, so there's my stop loss just below that zone of support that it's above, that it's bouncing off of. Then if it does break that support, then you say, well, maybe I want to sell stop down here then. If it hits that stop loss, then there must have been bad news for oil. So if it hits, let's say 38.6, maybe I'm selling. Okay, your hope on your buy position is that it doesn't trigger that sell stop. But if it breaks that support, then maybe one of those unexpected headlines came out that for whatever reason is driving the price of oil to break support levels. In which case, if it hits 38.6, maybe I'm selling, right? Because you never know when that unexpected fundamental news might reverse the market on oil. So you've got, then your stop loss would be back above that zone if you triggered the sell position. And so maybe 39.2 to my stop loss. If I was getting in on the sell, and where would my take profit be if it breaks this support? It could come down to the next support level down here at 37 and change. So maybe 37.25 as a take profit. That's just down to the next technical support level that we're seeing. Okay, so now I've got a sell stop prepared as well. So I'm in on the upward momentum. It's trying to bounce into profits as we're watching. Where would our take profit be on the buy? Probably at the first resistance level here if you're scalping. So right at about $40, less than $1 up. So this is a scalp move. So right at about $40 is the first level of resistance that we see. That could be the spot where you do a take profit. So I've got about double the potential profit or a little bit more potential profit than what I'm risking. And why is this already in profit? Why is it bouncing? Because we're riding the momentum of the fundamental news, okay? And this is how you can scalp the market. While the momentum is hot and you find a nice technical entry point, you can go after that bounce, okay? And again, I could close with just a short movement in profit if I'm a scalper, right? I think I'll be more patient with this and see if this climbs with today's momentum towards 40, okay? I'm glad you asked about oil. I'm glad we looked at that. Any other assets someone would like to request before we end things? We've been going about 45 minutes almost, so we're about near winding things down today. Okay, gold. I figured somebody would ask about gold. Gold is a very interesting asset lately. As the markets were hitting all-time highs, as the excitement came that the lockdowns were being lifted and people were getting back to work, the markets were going to all-time highs again. And guess what? Gold was also going to all-time highs. It was climbing with it. So if you want to know the weird effect a global pandemic can have, you can have economic optimism about lockdowns being lifted, and at the same time, fear about the long-term effect of the pandemic still. So it was driving gold up as well at the same time, which usually it's the opposite. If markets are climbing, gold was usually dropping. And if gold was going up, usually markets were dropping. But it's been very interesting with the markets and gold moving in the same direction, climbing together on the same days and dropping together on the same days. So the fundamentals have gone out the window a little bit with gold, where you see gold climbing on days like today, where there's economic optimism. You say, okay, safe havens should drop, but the safe haven of gold rising while there's economic optimism. Very interesting, the dynamic that's been occurring during this pandemic. But that's the pattern we've seen. Very bullish gold, even with the markets rising. And so I'm looking at gold and I'm saying, here's a support level right here. I don't like the entry point right now on gold. It's right in the middle of this resistance and this support. But a pending order to buy off this support level, okay, to buy off that support level with your stop loss just below the support, that could be an opportunistic entry point. Very little risk, okay? If you buy, if it hits this support level here, okay, you see the support, boom, up. It hits here, 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 up. So if it hits here again, buying from that support with a take profit up at this resistance up here could be an opportunistic entry point, and you don't have to risk much to get below that support level with your stop loss. Okay, so to set that up, how could we set up on gold? Pending order, buy limit, buys from a lower point. You could say at 1920. If it hits 1920, maybe that's a spot you want to try and take a shot to bounce off that support level again. Stop loss below the support, down around 1917. Okay. Take profit up around 19 at this resistance level up here, up around 1927. So if we're comparing the potential profit to the risk, we've got from our entry point, $7 to our take profit, potential profit, $7 per ounce, and risking only $3 per ounce. So better than 2-to-1 ratio. Why? Because you're waiting and being patient to buy off the support level. Okay, that's the idea of patience. And you see it's trying to push down. To get in right in the middle of this movement, technically speaking, doesn't make sense. To buy off this support level during a global pandemic, where markets are rising, and we've seen the pattern that gold has tried to rise with the markets, maybe largely because of the weakening USD. Gold is paired against the USD here. So for whatever reason, we're following the pattern that we've seen. This may push down and bounce off the support level again. And if it doesn't, you've got a small risk. And so potential profit, more than double the risk, not a bad setup. If it takes a bounce here, that would be a nice little scalp on gold's movement. Market move right now on gold looks like a sell until it gets near the support level. Looks like it's going to test the support level. Okay. Obviously no guarantee on any of it, but this looks like a nice little setup with a pending buy limit to take a shot. Now, if it breaks this support, you could have a sell stop down here as well. If it breaks the support and hits your stop loss on the buy limit, a sell stop entry down around 1916 could take advantage of a reversal on gold with your take profit at the next support level down here. Okay, so you could have a pending sell stop just as easily as this buy limit. In case the buy limit breaks through and hits the stop loss, boom, you're in on a sell with that momentum to the next support level. Okay, very easily could happen. That's where you're trading smart, not trying to be right, but trying to be smart. Okay, so if I want to set up a pending sell stop, very easy. Gold, pending order, sell stop. If it hits stop loss on my buy limit, then I'm in on a sell stop. If it gets down to 1650, 1916.50 with my take profit at the next support level down here around 1912. And my stop loss just back above that, maybe up to 1920. Okay, a little bit more potential profit, about 450 per ounce than my risk, which is about 350 per ounce. Okay, there we are. I only need to be right on one of those to profit overall, right? 1 out of 2, I profit. Okay, so in this way, you're managing risk. You're setting yourself up with entry points that are opportunistic, with larger potential profit many times than the exposure because of your patience on the entry point. And all the while making moves that make sense with the fundamentals as well. Okay. Austin, yeah, we can move the candles. We can zoom in, zoom out. Okay. We can go to whatever time frame we want. Those of you that are new to trading, like Austin, please take the time. All of these sessions are recorded. Feel free to go to our YouTube channel and go to the English webinar section, and you could go back through any number of these webinars to get repetition on the terminology, on the strategies, until you become more and more comfortable with the ideas. Ahmad, we're out of time. I'm sorry, but the NASDAQ would be the same example as the S&P 500 that we already went through. It sets up the same way. It's being driven by the same assets right now, the FANG group of assets. Facebook, Amazon, Apple, Netflix, Google, and also Microsoft. Okay, the tech stocks were really happy about that tax deadlock on that ruling today. All right, everybody. Thank you for joining. Good luck with your trading the rest of the evening. Even though it's a bank holiday in Canada and the US, some other areas, there's still some nice technical movements here being driven by the fundamentals. Okay, everybody. Thank you. Bye for now. Next session is on Friday for the next live session.